Hey everybody, this is Amy.
Hi, Kim's one.
We're here at Mortgage Investors Group today, and we're continuing the home buying process webinars that we've been doing for you every week for the past couple of weeks. And today we are going to dive a little bit deeper into credit and what kind of things your lender would be looking for on your credit report, what things could hurt you. And I think Kim's also going to talk a little bit about websites like Credit Karma and if they are accurate or if they are not. So I'm going to let Kim get started for you. If you have any questions, feel free to type them in on the comment section, and we'll be happy to try and get those answered for you along the way.
Awesome. Thank you, Amy. Yeah, just to kind of let people know a little bit what is required for credit scores, and some things that make up your credit scores and ways to improve. First of all, when you do apply for a mortgage, we pull from all three credit bureaus. Of course, those credit bureaus is Equifax, Experian, and TransUnion. We're going to use the mid score of the three. So we're not going to use your low score, but you also don't get to use the high score. We'll always use that mid score of the three. And some people say, well, why are they always different? Because it can be a little bit different between the three. And each bureau has a little bit different scoring module. Like some may put more emphasis on your pay history. Some may put more emphasis on, how many accounts you have with balances, and some more how long you've had accounts, what's your credit history timeline. So basically, that's the first thing we're going to do is we're going to pull those three bureaus. And then, of course, scores we're looking for. The lowest score that mortgage investors can work with is a 580. If someone has a 580 or greater, we can do our FHA product or our VA product. If you have a 620 or greater, we can do our conventional loans, our rural development loans, and then of course the first time home buyer loan now requires a 640. So you got to have at least a 640 for that particular program. Just some things that make up, what your credit scores consist of, and things that you need to look for. Obviously, number one that everyone probably knows and should know is, don't make your payments late. I have people ask me lots of times, say, well, my payment was due on the 10th and I paid it on the 15th. That's okay. It's what gets reported to credit bureaus is anything that's over 30 days late. So do not have over 30-day late payments. That's the biggest thing that's going to hurt your credit score. And then when we talk about accounts, like different types of credit, you have mortgages, and then you have installment loans. An installment loan can be a car loan, a student loan, a personal loan, and then you have credit cards. When you're talking about those three in comparison to which one hurts my credit the worst, obviously a late mortgage payment is going to have more impact on your credit score than the other two. And then the second one, of course, would be installment loans. Again, that one. And then the one that will hurt you the least if you do have late payments would be credit cards. But still, you don't want to have anything over 30 days late. The credit bureau does report a time span of 30, 60, or 90 days late, and then each credit line, they'll tell you how many times you were 30 days late, 60 days, or 90 days late. Of course, obviously, the more there, the worse, what's going to affect the score. Now, another big thing with credit cards, you always want to keep your balance to at least 30% or less of your limit. So in other words, if you have a $1,000 limit on a credit card, to keep your score up the highest and the best is to always keep that balance around 300 or less, and that will keep your score the most. People also ask about inquiries. Say they're shopping for a mortgage and they're like, hey, I don't want to let you pull my credit because it's going to hurt my credit score.
Right.
Mortgage inquiries are a little bit different than, like, for example, I had one the other day. He had bought a car just maybe a month or so ago, and there was like 15 inquiries where the dealership had pulled his credit and then had sent it to a lot of different places trying to get him the best rate. Now those can have a little bit of an impact, but I always use the worst case of what inquiries does to your credit is, for example, going to the mall. If you went to the mall and every department store that offered a credit card, you applied for one, you could walk out of there with 10 new credit cards, obviously, and that can be something that can have a major impact on your credit. Another couple things that affect your credit is, number one, I guess one of the biggest things out there, of course, is bankruptcy. If you do file a Chapter 7 bankruptcy, the minimum you've got there is about 2 years before you can get a type of a secondary market like FHA or VA. Those loan programs require 2 years from the discharge date. And then also another thing that we look at is collections. Collections can be anything that you have not paid that's been turned over to a collection company. Medical is the biggest one that we see. Lots of times you may not even know that they turned it over to a collection company, or you may be thinking, hey, my insurance is supposed to pay that, so and it doesn't pay it, so it's always good to watch on your medical bills as to how they affect your credit. We, as a company, Mortgage Investors, we don't require medical collections to be paid off, but I will be honest with you, it does have a bearing on our credit scores. A couple more that we see under the collection line a lot is cell phone bills and cable bills. Now, the bad thing with those is they don't report to the Bureau when you pay. So they only report to the Bureau when you don't pay. And those can have a big impact on your credit. And then even outside of collections, then we also talk about judgments. Now, judgments are a step further from the collection agency. A judgment would be something maybe that you had gotten, you had to go to court over. We see that sometimes with medical as well. Those have to be addressed, obviously, because anytime there's a judgment placed against you, that can have an impact on your home ownership. In other words, that whoever filed that judgment could actually say, hey, I've got some ownership in that home you just bought because I had a judgment filed against you before you purchased the home. So we definitely have to do a lot with those, to make sure to get those cleared up. Just a couple more things, of course, that Mortgage Investors, we do offer a rescore option. So when we pull your credit, if there's something you can do, then it's a 30-day time frame, it'll come back with a potential score. So we take that information and give that to you, and then if that's something you can, it's usually paying down credit cards like we talked about, paying off collections, things like that, and then we can give you that information, and then of course you can take that and then get it paid down, get the documentation back to us. We can send it back to the credit bureau and potentially get your score up. So we've used that a lot here because some people will be real close to what the score they need, and they can just get enough off of that to get that score up. So
I'm going to ask you a question. I know you said that like the cable companies or the cell phone companies don't report when you pay, they only report when you don't pay. Mm-hmm. So I know that I have people come to me and they think that like from where they've paid their electric bill, that's going to show on their credit, or that their water bill. If somebody is, let's say, 21, 22 years old, and they don't really have mm-hmm. car loans and, mortgages from the past, or, right. Car loans, anything like that, can you build a yes. alternative credit?
You sure can. You sure can to do that. And basically there we would just get proof. We can use, like she says, we can use car insurance, cell phone bills, as long as the cell phone's not prepaid. We can use electric bill, cable, internet. If you've had some rent-to-own accounts, like with Aaron's Rentals or something like that, we can use all of those. Now, one that we really like to use if you have is rental history. So if you have a rental history of paying your rent for the past 12 months, then that's one of the best ones that we can use. Now, I'm going to be honest, a lot of people out here, they pay their rent with cash.
Yep.
Cash and receipts will not work. If we need that as a rental source, we've got to have canceled checks. People say, "Why I can get the receipts?" Well, you can go to Walmart and get a receipt book and bring in 12 months of receipts. So they will require canceled checks. So if you're paying rent and looking to purchase a home soon, maybe try and start, if you can, write a check for that, so you've got that record of the rental history.
So with the electric bill, that would need to be in their name for probably at least a year.
Yes. Yes.
And the other bills as well, water bills, cell phone.
We have a 12-month history of those, yes.
Okay. All right. Well, that is some good information. Appreciate you sharing that with us. And then next week, I think we're going to talk a little bit more about income and how Mortgage Investors Group and lenders in general use your income. What do they use, off of your W-2, off of your pay stub to determine how much of a mortgage you can qualify for. So that'll be next Wednesday at 12 o'clock. We look forward to having everybody come back then. And again, if you are in the process that you want to buy a home this year, if you'll go to buyhomein2019.com, you can download my Ultimate Buyer's Handbook, which is going to be a step-by-step process for you to kind of guide you through everything. It's a real good resource, and if you're not currently working with a realtor, I would love to help you find the home that you would love to live in for the rest of your life. So just give me a call, 423-748-8811, And if you need a lender and you need to get pre-qualified, Kim, how can they get a hold of you?
My number is 423-748-3415. And as far as an application, there's no charge to apply. And we can do an application over the phone, in person. I've got a website, and I've actually got an app now that you can download that has a lot of helpful information on it as well. So.
All right. Thanks a lot. We look forward to seeing everybody next Wednesday.
Thank you.